In today's video, I'm going to talk about how I'm preparing for the next real estate market crash, my plan and strategies on how I'm preparing for it, and some of the potential outcomes that I see may happen if the market crashes, or if the market doesn't crash, how my plan will unfold. If you're new to this channel, my name is Koukun and I am a real estate investor and I run a real estate team that helps investors buy and sell properties here in the Niagara region. If you're interested in knowing more about what we do, check out some of the links in the description below. Alright, so if you've been following the real estate market here in Canada, in the United States, or in most of the developed nations in the world, real estate prices have been skyrocketing. It is a seller's market in pretty much most municipalities, and specifically in the Niagara region where we operate, we are seeing some crazy price gains. In just under a year, some areas are going up 25, 30, 35%, and specifically in some homes, we're seeing them sell for 50% higher than what they sold for just last year. So it's crazy what we're seeing in the market right now. And while in the Niagara region and in Ontario, there are definitely some key fundamentals that's driving the real estate market, the growing population, the lack of supply. These are all factors that give a fundamental reason for why real estate will be a good investment over the long term. It's still hard to say that that justifies, in some cases, a 50% price increase in under a year. So definitely, this is a very strange time that we're living in. That being said, at least here in Ontario, if you look at the past decade or 2 decades, there have been a lot of people that have called for a real estate crash at many different times. So definitely now is not the first time that people think the market is out of whack. It's happened multiple times before, and so far, all of them have been significantly wrong. As a result, I don't know if there is going to be a correction happening anytime soon. My preparation to prepare for the next real estate market crash is one that I've come to recently, more from the perspective that I want to preserve the wealth that I've created, not necessarily trying to create the most moving forward. So it's a bit of a shift in terms of the focus that I have right now, which is different from the focus I had when I was just getting started and scraping a down payment together to buy my first rental property. So it's a bit of a different time in my investing journey. So here is my game plan. First, I'm going to continue to buy real estate. This may seem counterintuitive, but any equity that I have in the properties that I already own, as they increase in value, I'm going to refinance that equity out and I'm going to look for good cash flowing deals that I can roll the money into. The criteria for my properties that I buy are going to be quite strict. I'm going to stay in the best neighborhoods in the cities that I invest in, and I'm going to demand that those properties create positive cash flow, because in a market correction, I want to own the properties that tenants will still continue to want to live. Even if my current tenants leave, I will always be able to find new tenants, hopefully, if I buy the right property of a high standard. And I want to make sure that my numbers make sense on the purchase and the renovation such that I can create positive cash flow based on today's rents, not banking that the rents are going to go up much higher in the short term, but based on today's rents, it has to cash flow. Maybe not a huge amount, but there has to be some cash flow from day one. So part 2 of my game plan is to invest in index funds. Right now, I own probably under 10% of my net worth in index funds, and I want that to grow over time. So what I'm doing is every dollar that I save from my real estate team, after paying myself a salary, paying our expenses, any profit we make, I'm putting that into index funds. I'm not putting it into private lending on real estate. I'm not putting it into any illiquid investment where in the situation of a crisis, I may not be able to pull that money out. I want these funds to be in a liquid, diversified investment. So I don't want it to be only based on Canada, or I don't want it correlated too much to real estate. I want it to be diversified almost away from real estate. These investments will likely grow at a much slower rate than my real estate portfolio. So that's why I'm going to just contribute as much as I can to build it up. However, it will provide that safety net, a nice little nest egg that's separate from real estate that I can turn to in tough times. Part 3 of my game plan is to have cash reserves. I want to have an emergency fund personally. I want to have an emergency fund for my business. I want to have an emergency fund for every single one of my rental properties, at least a few months worth of expenses, so that if anything happens, I always have some funds somewhere that I can pull and use. And by making sure that my real estate portfolio is cash flow positive, these emergency fund reserves should hopefully grow over time. So here are some of the rules that I've set in place to make sure that I follow this game plan. The first part is to not invest any of my personal savings into real estate. I only want to redeploy the equity in the properties I own into more rental properties. I don't want to put any of my savings into real estate. And I will continue this until index funds make up at least half of my portfolio, half of my net worth. Right now, it's only sitting at around 10%, so it's going to take a little while before it reaches that 50% mark. Here are what I believe to be the possible outcomes from following these rules. The first outcome is if there's a real estate market crash, and for example, if I'm leveraged up to 80% on all my properties and there's a 20% market crash, my real estate component of my portfolio will become worth basically zero, maybe even negative. So the index fund portion of my portfolio will automatically become 50% or more than my net worth. If and when that happens, I will be willing to take either my savings or my index fund investments and redeploy them into buying further rental properties, as long as I make sure that I've taken care of any uncertainties that may arise from that kind of environment. The second scenario is that there's no market crash. There may be a scenario where real estate continues to rise for the next decade and even longer. If that happens, that's also completely fine because I'm redeploying the equity in the rentals that I have to buy more rental properties and make sure that each property is cash flow positive. So I will continue to grow the investment in real estate, and in that scenario, my net worth will continue to rise. The third scenario is if there's a financial crisis that results in the real estate market crashing and the stock market and index funds also to crash, say by up to 50%. In this scenario, it gets a little bit dicey because all my investments have gone down. This is where having those cash reserves will come really in handy. So first and foremost, I need to make sure that my house is secure, my family is secure. I want to make sure I have enough funds to meet any short-term obligations. If some of my tenants stop paying their rent, I need to know that I have enough savings to cover those mortgage payments for some amount of time. The next step is there may be an opportunity to invest some of the cash reserves, but if I run out of cash reserves, I will then start selling the bond component of my index funds. So right now I'm doing an 80-20 split in my index funds between stocks and bonds. And in a financial crisis, typically the stocks will go down, but bonds should hopefully preserve most of their value, maybe even go up. So I'll start by using up the bond portion of my index funds. And then once that's used up, then I may start dipping into the stocks, but I want to do so slowly so that I don't go through all of them when the prices are the lowest. I want to make sure that I try to use as little as possible when prices are depressed and almost try to contribute more money into them in those lowest times. In that situation, I'm not as worried about taking advantage of the opportunities of prices being low, but rather just simply to survive and get through that time. That type of scenario is likely going to be a tough scenario for everyone. It's going to be tough for businesses. It's going to be tough for people losing their jobs. There's going to be pain all around. It's not really a situation where I'm so interested that I need to make the most money out of, but rather how do I get through to the other side safely? After watching this video, you may be thinking that the situations that I describe are quite extreme, and the reality is they are extreme, but at the same time, I consider myself to be quite a risk-averse investor, which may sound funny because I invest in real estate and most people consider real estate to be risky, but I look at it as it's the least risky way for me to make sure that I make some money through my investing, but I want to reduce the risk as much as possible in the process of doing that. And one of the reasons I feel it's important for me to prepare for a real estate market crash is that I plan on investing in real estate for the long term. And if I'm being realistic, I may be in the market for the next 50 to 60 years, of which there is likely going to be a market crash at some point. The last market crash here in the GTA was 25 years ago, right? Alberta just went through a market crash, and it may be coming to every location at the same time, maybe it comes at different times due to regional factors. We don't necessarily know, but I think over the long term, over the next 50, 60 years, it is likely that a market crash is going to come. I'm not predicting that one's coming right away, but if and when it comes, I definitely want to be prepared. One of the key realizations I had to come to this decision to make these choices is that making more money will not make me happier, especially when we're talking about extreme amounts of wealth. So where I'm at now, I feel quite comfortable. I think I'm going to increase that over time. If it becomes, 10 to 100 times what I have now, I don't think I'm going to be any happier. I don't think getting a much bigger house is going to dramatically improve my happiness, a much nicer car, like much better vacations. Yes, it will be nice to do some of those things, and I think I will improve my life gradually in terms of what I can afford, but those things aren't necessarily what will bring me happiness. The one thing I know for sure is losing everything will definitely make me unhappy. It will definitely make me stressed. So while my strategy may not be for everyone, I feel it really aligns with my priorities, which is to protect my well-being and happiness. And it results in me choosing the slow path to creating wealth over the long term with much less risk and uncertainty. I hope you enjoyed this video. Let me know in the comments below, are you expecting a market crash? And if so, what are you doing to prepare for it? Also, if you like this video, give us a thumbs up. And if you haven't already, definitely subscribe. All the best.